CNBC TV 18.
Hi there, good morning and welcome to Business Saturday. I'm Davina Munro at CNBC TV 18's Mumbai News Centre, and here are the headlines. Wall Street ends the week on a weak note, breaking 6 weeks of consecutive gains. The Dow is down 0.3%. The S&P and the Nasdaq lose around 0.5% each, and the dollar index posts its 9th consecutive week of gains as investors await the outcome of the US Fed's meeting next week. Brent crude sinks to near 2-year lows, slipping below the $97 per barrel mark and ending the session at 96.91. NYMEX crude also hits multi-month lows, ending in the red. No respite, of course, for gold as well, which closes at the lowest level in 8 months. And it's a double whammy for the economy. Retail inflation slows only marginally and comes in at 7.8% for August, thanks to a spike in food prices. Growth is also slowing. Industrial production in July grows by a mere 0.5%.
Does an HDFC Bank merger make sense? From a business point of view, I think so. Are there regulatory constraints? Yes.
And Aditya Puri says a merger with HDFC Bank and HDFC happen only if the RBI grants some concessions. He says that he expects clarity from the government over raising the cap for foreign institutional investors in a month or two. And starting with the action on Wall Street, US stocks closed down on Friday, breaking 5 weeks of consecutive gains. And this, of course, as investors awaited the Federal Reserve's announcement next Wednesday. The Dow Jones and S&P 500 closed near 3-week lows. Hampton Pearson now has those details. Hampton?
For CNBC TV 18, I'm Hampton Pearson. U.S. markets ending the week lower. The Dow dropping more than 61 points, the S&P losing about 12, the Nasdaq down by 24 points. Consumers are one step closer to getting their hands on Apple's new iPhones. Pre-orders for the 6 and the larger version of the 6 Plus began early this morning. Apple is reporting record numbers of orders, though it's not tipping its hand as to how many new phones thus far have actually been sold. The major carriers are already reporting delivery delays up to 4 weeks for the pre-order devices. That's the action from the U.S. markets. Back to you in Mumbai.
All right, thanks for that, Hampton. And European markets ended the week on a mixed note. The British FTSE and the French CAC ends just barely in the green over there. German DAX was also down about 0.5% in trade. It was, of course, a similar picture in the periphery as well, with the Italian MIB ending lower over there, while the Spanish IBEX remained flat with a positive bias. And in the currency markets, the dollar index posted its 9th consecutive week of gains. The US currency rose to 6-year highs against the yen. The euro also closed in the red against the dollar at about 1.29 levels. And this, of course, on speculation that the Federal Reserve may strike a more hawkish tone when it meets next week. But the big news now continues to be on the slide of Brent crude prices. Brent has actually now slipped below that $97 per barrel mark, closing at 96.91 in Friday's session. Brent is now near its lowest level in 2 years. NYMEX crude too ended Friday's session barely above its weakest since January. And no relief for gold either in the commodities space. The precious metal ended near an 8-month low on Friday, dropping almost 1% for the week. The yellow metal also lost about 3.1%, its biggest weekly drop since May. A lack of physical and investment demand weighed down on the bullion. And now a lot of these movements in asset classes across the world has been driven by fears of an earlier than expected interest rate hike by the Federal Reserve. The US Central Bank will meet next week, and all eyes are now on what the Fed says next Wednesday after that policy meeting. And back home, after 3 sessions of profit booking, we finally saw some green on the Lal Street. The Sensex reclaimed the 27,000 level, gaining over 60 points in trade on Friday. The Nifty also reconquered 8,100, gaining about 20 points in trade. And the mid-cap party continues to roll on with the index up over 0.4%. Meanwhile, of course, on Mint Street, the rupee rallied against the dollar on strong flows from exporters and FIIs. Lower crude prices also lifted the sentiment on the Indian currency. It finally closed at about 60.65 to the dollar, up about 0.5%. And however, on Monday, the picture could be quite different for Indian markets on the back of the weak macro cues that have come in. Data, of course, released after trading hours on Friday showed double trouble for the Indian economy. India's retail inflation slowed marginally to 7.8% in August, driven, of course, by rising food prices, which, of course, led to inflation in food acceleration to about 9.4%. And not just that, factory output is also crawling, with industrial production data for July showing a mere 0.5% growth over there. Lata Venkatesh now has those details. Lata?
Well, growth is quite clearly a disappointment, coming in at 0.5%, and it's lower. Industrial output is lower. Or as bad as 0.5%, largely because manufacturing let us down, and manufacturing is 80% of the industrial output. The remaining 20% is accounted for 10% by mining and 10% by electricity. They've not done badly. Mining is up 2.1%. Now, as you know, the mining ore bans are all now factored in. You're at least not seeing contraction. Likewise, electricity, because of the core sector numbers, was always expected to do well. It's come at a handsome 11.7. But manufacturing is not just bad, it's also a harbinger of very bad internals. Capital goods is contracted by 3.8%. Just last month, we were rejoicing that it may have turned the corner with a good 20%, but this is a lumpy number, and in 6 out of the last 7 months we have got a negative number, so there is no improvement in capex. Likewise, consumer durables, which the auto sales seem to indicate is turning the corner, is showing no such improvement. We have got a minus 7.4% consumer durables, consumer goods, and a minus 23% in consumer durables. So clearly neither the consumer nor the investment cycle is pointing to any growth. The July industrial output number is simply bad news. It would indicate that 5.7% GDP which we clocked in the first quarter is unlikely to be repeated in the second quarter, in the July-September quarter. Coming to inflation, again the news is quite bad. The expectation itself was it would be a high 7.7 compared to an 8% in July. These are August numbers, but these have come in at 7.8%. So even a good 10 basis points higher than the average that we got from economists. And there, the vegetable inflation is the big culprit, which has come in at 15.5%. Other culprit includes milk and milk products, which have come in up 11.7%. That was always expected. It was bad over the past 2 months. And milk inflation is an international inflation. Milk products are expensive all over the world because of a fodder shortage, and that's again traced to the rains. But the good news is that it is restricted to a milk and a vegetable inflation. It has not become a generalized cereal inflation, for instance. Cereal inflation is at 7.4, and that was similar to what we found in July as well. Also, the positive is that non-food fuel inflation, which you call core inflation, comprising, you know, house rent, educational expense, medical expense, transport expense, that has actually fallen from 7.4% in July to 7% in, actually 6.9 to 7% for the month of August. So that is the small positive the market will cling to. You should not see any positive reaction in the equity markets or in the bond markets on Monday. The markets will be somewhat cheered by the fact that core inflation is lower, but with overall inflation remaining at 7.8%, there is no expectation of a rate cut for the next 12 or 15 months, and maybe a niggling fear of even a rate hike in January if the inflation doesn't come down to 8% by Jan.
The fuel inflation will be lower. I think there are international prices are coming down. It will have a very good effect. But let me also say, this is a period during which always prices rise, because between April, that is from May or June onwards, to September, October is a period during which actually seasonally prices rise. Therefore, one should not draw any conclusion from this regarding where we will be in January. I certainly believe, as I mentioned to you on an earlier occasion, we should work towards a much lower level of inflation by January 2015.
In general, it seems that the consumption activity remains, overall private consumption activity remains somewhat on the weaker side. It was visible in the Q1 GDP numbers as well. If you look at the consumer confidence index of the RBI, the current situation index has actually was in first quarter was deeper in the negative. But clearly, the future expectations show that there is a pickup. There is some improvement in consumer confidence. I think and with the pickup in auto sales, especially passenger cars in the month of August, I think you will gradually see domestic consumption picking up.
All right, so no positive reaction expected on Monday, and time for a short break right now. But coming up,
does an HDFC Bank merger make sense? From a business point of view, I think so. Are there regulatory constraints? Yes.
Aditya Puri coming up next.